right, trade recap. So let's dive into it here. I took a trade on Australian dollar, US dollar right here. And let's first go over the thought process. So coming into this day, and I made a forecast on the 21st of, 21st of November. Now, right here, we could take a trade off of this daily fair value gap to continue lower on the dollar as well. Now, here it can also come into the order block right there. Can also come into that fair value gap that is overlapping with the order block, of course. Can also wait for the weekly fair value gap right there to then continue lower. Now, overall, I mentioned that taking a trade right there is perfectly fine. That's perfectly fine, nothing wrong with it. But as soon as you do get signs that it might not want to follow through overall, etc., then it might trade into the weekly fair value gap next week. So that is, again, the only reason or the only thing that I can see right there that could be a cause of what happened during my trade. Meaning that right there, we had multiple options. We had this option, we had that order block, we had the weekly fair value gap right there. So overall, I do think that the higher time frame could have been better. Could have definitely been better overall. And that is the same with, if we look at Australian dollar, US dollar right there, we have this daily fair value gap, which I would like to see higher prices from right there. Now, the only thing is that we have not really overtaken this monthly fair value gap just yet. So again, this is sort of understanding the reason why I might have lost the trade, etc., and understanding why something happened, even though you don't need to go full in depth on this. As in, I took a loss, that's it. Perfectly fine, move on. That's it. Now, right here, we went into the daily, but again, to touch on that a little bit more, to end it with that as well, is that is good to then, with those arguments, to then classify an A plus setup from a B setup. So what is extremely high probability and what is high probability, but still there are reasons or there are arguments that we can see why it might not work out, if that makes sense. So right here on the daily fair value gap right there, that is where I would like to look for a trade. Now, currently my time zone is New York local time. That is the time zone I'm currently in. So I woke up at that candle, 6 a.m. around that time. Then right there, that was my entry as well on the 7 a.m. candle in the fair value gap right there. Then the next thing I did was cover my stop loss beneath that breaker right there. That is the thing I would like to cover. And the reason for that was because if we target a context high, it's a 1.77 RR. So it's not even a 2 RR. Now, a 2 RR can be targeted with a little bit higher right there. I was fine with a 1.77 RR right there. Perfectly fine for me. And also mainly reason because I got filled pretty good this time. So I got filled a little bit lower. So it was around a 1 to 2 RR for me. So nothing wrong with that in that sense. Overall, though, I do think if we compare this, and that's very interesting, right? Because that's what I like to do with the high probability and low probability, finding what are reasons that why it might not be super high probability. And if we compare this to the trades of last week, for example, GU or EU trades, etc., then we can definitely look at this as a little bit lower probability. I do think that. And that is mainly the dollar, what it's doing, Australian dollar, US dollar itself as well, what it's doing right there. So that is definitely what we can see overall. So that is very interesting. And again, doesn't mean you should stress over it, but it's great to acknowledge that and great to then understand, all right, if I were to take this trade again, then I might pay attention more to that next time. So that is very interesting. Now, right there there's nothing really special about this trade, as in it was just a 1 hour ST right there that I entered on. I didn't cover this low, and the reason for that was because then the RR was just simply not worth it for me anymore. So you could argue as well that it was a little bit forced on my side because a lot of things already moved higher. So you could argue that. Overall, I'm happy with it and happy with the loss. Valid trade in my eyes. Now, let me go over the other, because I had quite the interest list right there, which there were other pairs above it as well, above Australian dollar, US dollar right there. Then we had GBP Canadian dollar, which did not come into the daily fair value gap just yet, so it was just not interesting to me just yet. Very simple. Now, Australian dollar, Canadian dollar, this is one I preferred over Australian dollar, US dollar. And the reason for that is because the drawn liquidity in my eyes is just is clearer than Australian dollar, US dollar. And that is again the same reason for what we had on a US dollar was just a little bit iffy. It was not super clear, as in, yes, we had the daily value gap to continue lower from, but there were a lot of bullish arguments to be made as well. As in, not super bullish, not long-term bullish arguments, but just bullish arguments to be made, as in short-term bullish arguments. So that is something to take into account. Where Australian dollar, Canadian dollar, I do think the draw liquidity is a little bit more clear, a little bit higher probability as well overall. But Australian dollar, US dollar gave the setup earlier right there, and Australian dollar, Canadian dollar here still gave a setup. But if I were to enter off of this fair value gap, the same fair value gap, essentially cover that breaker, then the RR was just not really worth it overall. So that's not something I liked. So again, currently, of course, if you entered off the breaker right there, that's perfectly fine. That's a great trade right there. It's absolutely great trade. And I even covered that breaker, or even refine a little bit more to cover that breaker. That's a great trade. Overall, a great trade in my opinion right there. Now, the reason why this draw liquidity was also a little bit clearer is because we were closer to the draw liquidity right there. And overall, I liked it a little bit more. Then, if we take a look at the rest, crude oil just had a huge move down. And of course, after that happens, I'm like, all right, I see that, not interested anymore. Perfect. Next one. GBP JPY. Now, GBP JPY at the moment came into that 4-hour value gap, but did not have any confirmation just yet or anything. So overall, at that moment in time, it was Australian dollar, US dollar, excuse me, who gave the setup. So that is why I preferred Australian dollar, US dollar at that moment in time as well. Because of course, if you're using my time zone right now, and I were to wait for GBP JPY right here, then it might give a setup at 10 a.m., which is too late in my opinion for me to enter. I would want to enter a little bit earlier. So right there, that is what led me to Australian dollar, US dollar right there. Now, overall, we can see right now that just a huge move down as well. Nothing wrong with it. Order flow just didn't follow through at that moment in time. Perfectly fine. Now, we could have, and this is quite interesting, just to see, or just to share my thought process overall behind it. We could definitely see early signs on why it didn't want to follow through overall. And if we look at the 15 minutes, for example, inside the 1 hour fair value gap, then we can definitely see that we're just not having that bullish intention. We tried to push higher right there with these candles, and it just failed to do so. Then we have this bearish fair value gap. That is definitely a big sign, very suspicious sign that it's like, all right, that is not something you would want to see when you're in that long trade right there. So that, once that happens, and the reason why I'm telling you this as well is because once that happens, it's very interesting to for example, look at a trade for your risk management, etc. That is all things you can take into account right there. Now, don't go too crazy with it, of course, because I would not go into the 1 minute right there to look what it's doing, etc. So right here, you can definitely see that the fair value gaps not following through eventually cost us right there. So that is definitely quite interesting that it just didn't have the attention at all right there. So overall, still valid, of course, but it's definitely something to gather data on and to add it to your list as well. All right, perfect. Thank you.